Yeah, go ahead. Does who get mad? Does Urs get mad? I don't care. This is perfectly legal, and you'll see that in a minute. So if they get mad, big deal. And they don't get mad. It's perfectly legal. Go ahead.
Is there a number of years? Like, can you do this year
After year after year after year after year? Yes, you can. In fact, since you're not excited enough, I'm going to bring you to the next level. The next level is we are going to go up now and become a maniac. A maniac means we are going to proceed to go out and buy, over the next few years, 100 little houses. And I know what some of you are thinking. You're saying, well, how the heck are you buying these houses? Is it FHA, VA, church conventional, or contract for deed? We're going to get to all that in just a minute. But watch. We're going to go out and buy 100 little houses. If we did that, we now would declare that we have 100 little houses going down all over this country. If I now multiply the numbers out, we are now going to have $400,000 worth of pallets. Keep in mind how much money have I lost? Zero. I now take the $400,000 to the wall and I say, hey, Urs, it's been a bad year. I've lost $400,000, even though I didn't. Urs says, no problem, but I need dynamite to blow the wall open. I now take the $400,000 that you did not lose, and we subtract it from the $100,000 you made from your job or career. And when you do that, your taxable income now drops down to $300,000. So get this. We're now going to take our tax return and we're going to pleasantly send it into the IRS. They're going to flip through it, go to the second page in the bottom of my 1040, and they're going to see on our tax return a number that says negative $300,000. Are they going to be mad? No. Because what I'm going to do is I'm going to attach a little letter to my tax return that's going to say something like this. Dear IRS, obviously you can see this has not been a good year for me. So I'd like you to do me a favor, if you will. I'd like you to take the negative $300,000 that I just reported as taxable income, and I would like you to look back to the tax returns that I filed in the previous 3 years. And if you can, I'd like you to take the negative $300,000 and apply it back to that income. And if it wipes all of my income, then I would like you to send all the tax dollars I previously sent you back to me. And since you've hung onto my money for 3 years, please do not forget the interest. And the IRS says, you bet we will, because that's law. Now I'm going to have a little PS in my letter. It's going to say this. I hope things are better for me next year. And if they are, I'd like you to do me a favor. I would like you to take any extra $300,000 that is left over and carry it forward to my income in the next 3 years. Because I don't want to pay any tax on that either. Will you do that for me? And the IRS says, you bet we will, because that's law. Meanwhile, my 100 little houses throughout the entire country are going up in value. The tenants are paying off all the loans. Over the years, the rents are increasing, and I'm making more and more money and not paying any tax. And now, I don't know if you're getting it yet, but it's just a good deal. And that's exactly the way it was. Do you remember earlier I said I was going to teach you some things through time? I just didn't tell you when I was doing it. That's not the way it is now. That's the way it was. In fact, what I just taught you is the way that it was back in 1981. That's the law I just taught you. Now, why did I do that to you people? Because it was fun for me. Okay? That's why I can relate your questions and so forth. That's not the way it is now. But now what I want to do is bring you through time. Here's what happened. By the way, would you agree this is a great law back in 1981? What do you think? Fabulous law. Well, here's what happened in 1981. Congress, who writes these laws, looked at this law and said, this is way too good. There are too many people making way too much money and not paying tax, so we need to even this out a little bit. And the first thing we want to do when we look at this law is come up with a solution to this problem. Where do investors come up with an idea that a building falls down in 25 years? Now, all of you in this room saw me. Where did I get the 25 years from? I just made it up. I just put it up there on the board. Because prior to 1981, that's exactly what you and I could do. And by the way, it had no bearing on how physically old the property was. You could buy a brand new property and say it's going to fall down in 25 years. You could buy a 100-year-old property and say it's going to fall down in 10. You could make up numbers. And the only reason I chose 25 is because that was the statistical average that most investors used. Well, get this. After 1981, Congress said, no longer are we going to let investors make up numbers. We're going to figure out when buildings that are rented out in America fall down. So get this. In 1981, our Congress of the United States of America sat down and did a congressional study to find out when buildings in America that are rented out fall down. Did this study cost any money? Millions of dollars. And when they were all done with the study, here was their conclusion. all real estate falls down at the exact same time. And you must now use the new table that we, Congress, have written into law and the IRS will enforce. If you buy a piece of real estate that is for investment purposes, no matter how old or new it is when you buy it, you must now declare after the year 1981 that it will fall down in I'm going to let you ponder on this for just a moment. What did they do to the deal when they changed it to 15 years? They made it better. And by the way, you didn't have a choice. If you bought it after 1981, you depreciate over 15 years, which meant you take more depreciation faster, come through the wall faster, zero out your income faster, be able to go back faster, be able to go forward faster. Would you agree this is a great deal? That's why it only lasted until 1984. In 1984, Congress basically said this. Whoops! We made a mistake. We told you that if real estate falls down in 15 years. We decided to upgrade our comprehensive study. By the way, to upgrade a study, did that cost any money? Millions. And when they were done with this study, they came to this conclusion. If you buy a piece of real estate after the year 1984, no matter how old or new, you no longer can use 15 years because that was way wrong. We now know for sure when a building falls down, and it is nowhere near 15 years. If you buy it after 1984, it is now 18 years. Who voted for these people? Is it still a great deal? Yes, it still comes through the wall. Everything I taught you is exactly the same. You just had to use an 18-year table. Do you agree it's a good deal? It only lasted for 1 year until 85. In 85, Congress said, we made a mistake when we told you 18. We're sorry, we're now changing it to 19. This is actual law that I'm teaching you. Isn't this bizarre? Is it still a good deal? Yeah, now that good deal, see, everything's still the same. Through the wall, zero out, back, forward, everything I taught you. Lasted until January 1st, 1987. On January 1st, 1987, here's basically what Congress did, and I'm doing it up here on the board right now. What am I doing? I'm erasing because they basically said we're going to kind of change the system a little bit. And this was called the Tax Reform Act of 1986 that took effect in 1987. And here's what Congress did. The very first thing, they said this. We are Congress, and we are not dumb. We now know after all these years that real estate does not fall down at the same time, it falls down differently. Therefore, we are going to now categorize real estate into two major categories, which we are going to call residential and commercial. But we're not going to use the words residential and commercial because that'd be way too easy for the average American to understand, so we're going to use these words instead. Residential and non-residential. All right. What's the difference? Residential real estate is defined as any real estate where people intend to live in it for over 30-day periods of time. A house, a duplex, a fourplex, an apartment building. What's non-residential then? Anything else. Does that make sense? And they said if you buy residential real estate, it now will fall down according to the new table. And this table is going to go into your notes because what I'm about to teach you has not changed since 1987. So now I'm bringing you to date. 1987 continues on to today. There's no changes. This is it. You can depreciate residential real estate, this is the next thing in your notes, in 27.5 years. By the way, can you immediately tell this is a government program? Yes. Why? 0.5. 27.5 years. Okay, so here's the question now. Is this a good deal or a bad deal? Gang, it's only 2.5 years longer than my very first scenario that I gave you. Yet, are there lots of people that were whining about this when it changed? What do you think? Yeah, because they had it so good when it was 15, 18, and 19. When it jumped to 27.5, they said, oh, this is terrible. Gang, it's still good anytime you can say you're losing money when you're not. Would you agree? But now,